Hello guys, have you ever asked your question? You're trading there and then you ask your question, how should I enter the market? Should I enter right now? Should I wait a few more minutes? Should I place a buy order? Should I place a sell limit? What should I do? Because the strategy, you have the strategy, okay, it's working fine. The process is working fine. You have your risk management side of things, but now, how do you actually put this together and entry on the market? Okay, so that is what we're going to be looking today. I've given out 3 videos already, more than 3 videos. You can search it up on the link in the description or somewhere here. Dave will leave it there, where you can see my trading system fully automated in instance of having numbers that you can score your fundamental analysis, and then from there you can extract the strongest and the weakest currency and trade one against another. Now this is the point where I'm going to teach you how to actually give that strong and weakened currency, put them together, and how we go to the chart and actually do an analysis on how to enter the market at that moment. Okay, so before we start, please give us a thumbs up on this video, share this content with your friend, and don't forget to subscribe to the channel. Let's go to the board right now. All right, so now that you have subscribed to the channel and give us a thumbs up, don't forget that, guys. That helps us a lot. I like to say that I have only 3 ways of entering the market. Okay, my favorite way is the third way. Okay, is when you enter the market after some instance of consolidation and a breakthrough, because that's the most important point. Okay, the whole actual concept of my entry model is the entry criteria is, of course, searching for the stronger currency and the weaker currency, pairing them together, and then going into the chart and doing some analysis. You can do your technical analysis, not a problem at all. You can do Fibonacci, you can do moving averages. The beauty of this entry point is that you can actually put these, if you have your trading system already ready to go, but you don't have your entry criteria, now you can implement this entry criteria. I'm going to give it to you in a second, onto your trading system. So you don't have to change your trading system for something new or anything like that. We will get this done already today. All right, let's get to the board now. So if you come back a few videos, maybe part 2 and part 1, you will understand on what I mean by pairing the weakest currency and the stronger currency. So basically we have a scoring system, very fast here. We have a scoring system that we can do, score the actual economy of the countries, and we can have a last score that it will be decisive to see if that currency is stronger or weaker. And then if, let's say, euro right now is on a 4, okay, so euro is equal +4, and then we have US dollar that is equal -1. The stronger currency right here is euro, okay, and the weakest currency right here is US dollar. Of course, not only for those both, you go for JPY, you go for CHF, all of the other currencies as well, on the majors or on the minors, exotics, whatever suits you better. You can implement that trading system anywhere you would like to. Now, this is something that we call the pairing. Okay, we take the stronger currency against the weakest currency, so that is euro dollar. Okay, and then as the stronger currency is on the base, we're looking to the chart to go up. We long euro dollar. Okay, so now that you know very briefly what is the scoring system, I highly recommend you to watch the full video so you can understand, what I've just explained in a very quick way here. Now, let me just wipe this down. I'll be back in a second. All right, I'm back here. So I've already wiped down everything and put the entry models here so you can get your notebook and start to write with me. I just got notified that actually we have a playlist. So go into the playlist and you can fully watch all the videos in there. You don't even have to hustle, going through here, going to that link, going to that link. It's all already put it together for you. Okay, how nice this is. All right, so entry models. The first entry model, the second and the third, they're very similar, but they have different areas of entry and different risk criteria, okay? So an entry model needs pretty much three things: an entry, and stop loss, and a take profit. That's all you need: entry point, stop loss, and take profit, okay? How we will define the stop loss? We will define to the ATR, the average true range, okay? We're gonna do a little maths afterwards, but that's very easy, nothing crazy maths. And the take profit is defined by at least 1.8 times the stop loss. And the entry point is actually defined by the market, okay? So let's go by a long entry here, okay? So we want to long euro dollar, all right? So our example today will be euro against the US dollar, and we want to long this market, okay? Now we go to the chart and we see something like that. Chart's coming down, okay? And then from here, we see an opportunity of a consolidation. Well, market comes and consolidate, okay? Don't forget, consolidation sometimes is not like on, you know, a very perfect, very perfect square, okay? They tend to be like ups and down, grabbing some liquidity down here, grabbing some liquidity up there, you know, going back and forth. But then we already know the fundamental reason why the market should go up, because we've done our scoring system and that gave us a long euro and short US dollar. So therefore we're longing euro dollar. Now, my entry model right here on this scenario is wait for a consolidation, okay? So let me use red on here. Wait for the consolidation that we have right here. And I have 3 points of entering, okay? I have for long, the best opportunity to long is on the bottom of the consolidation, okay? So let me just write it down here. So first best point, okay? So that's the first best point. The second best point is halfway the consolidation. That's usually, if you look at the chart, if you open the chart right now and find out a consolidation, you can see that there is a halfway of the consolidation. It's where most of the points gets touched. Most of the price gets touched. So what I mean by this is, if we look here, the halfway of it, this was randomly drawn, okay? If we look at right on this consolidation, if we put a middle line, okay, halfway on this box, somewhere on here, we can see that we have majority of the touches on that line, okay? So 1, 2, 3, 4, 5. All right, so we have 5 touches. Actually, we could even, you know, count this one, but this is not touching, but let's not counting. But we have another one here and another one here. So 7 in total touches on the middle line. So that's the actual second best point of making an entry, okay? And you will understand later why I mean by first best point, second best point, and the last one, third best point. So right here is the second best point, okay, in the middle line. So second best point, okay? And the last point is actually when the market already breaks through this consolidation and comes back for pullback, and it will be on the support now before resistance. So right here, the third best point. And the last. After that, we don't gonna enter the market anymore, okay? Now, I'm very curious if you guys already got what I'm trying to teach here, and why this is the first best point of entry, and why this is the second best point, and why this is the third best point and the last point of entry. After that, we're gonna, you know, let's just suppose that the market goes up. Perfect. We have an uptrend now. We predicted that way. we've traded with the fundamentals, and we had a entry point. Remember I was saying to you, so we only need three things on an entry model. We need the entry point, the stop loss, and the take profit. Okay, so let me note this down here. So entry point, the second one is the stop loss, and the third one is the take profit. Okay, these are the most important, I would say, things of an entry model. Okay, if you don't have how to consistently do the same thing on over and over and over again, like 100 times, 1,000 times, 10,000 times, 1,000,000 times, a gillion times, with entry points, stop loss, and take profit, then your model, it's not a model, it's a randomized sort of thing to trade. Okay, you need a actual, okay, this is how I do, this is what I'm doing, and this is how I'm going to manage this trade. Okay, so the entry point, how we define the entry point, we already have here. First best entry point, second best entry point, and third best point. Now, if we actually get on the best point, this is the better and this is the best option for risk management. This is why it's the first point. Why? Because we're trying to long the market. We're not looking to the market to go down. So having our entry point, let's say right here on these circles, okay, somewhere around here, it gives us more room to TP and less room for stop loss. So this will give us a risk reward, a much higher risk reward than we actually gonna have on the second best point. If we go for the second best point, we're gonna be entering on these green circles right here. All right, and now we're gonna have until here as a stop loss and plus something else. And the last third best point is going to be on the top of the consolidation after the break and pull back to continue to go higher. This is our third best point right here. Okay, so it is the third best point, but it's not the, I would say, it's not the actual very good risk reward point. Okay, I rather prefer to have only the first and the second and forgot about the third and getting like a FOMO, like a fear of missing out the trade. Relax, you can go to another pair and you can trade another pair as well. But on this one here, on the third best point, is you're going to be risking 1% to maybe be getting 1.5, 1.8 at maximum. Okay, so how would we define the stop loss? We know the entry point. Okay, entry point, good. Okay, done. How we define the stop loss? Well, remember I've mentioned to you guys the ATR, the average true range. So this is the indicator that you can access on your MetaTrader. Okay, it's very easy. If you are starting and you don't know and you don't have a clue on how could you add this indicator to your MetaTrader, please call one of our account managers, call your account manager. They will be 100% happy to help you. And if you have any more questions about MetaTrader or even MetaTrader 4, MetaTrader 5, you can ask them, okay? They are best friends, they help you, they want you to succeed on your trading, so make sure to use it. It's a free service, all right? You don't need to pay them to, get on a call. I see them on the trading floor every single day, calling people, helping out people. So it's not dumb to ask questions, okay? People that are asking questions, they learn faster because they actually get answers from people that are knowing the industry, that knows what has to be done. All right, so don't forget that. Call your account manager, send a message to your account manager. They're gonna help you. All right, so how are we gonna define stop loss? We're gonna use the ATR, all right? And the ATR, as I say, is the average true range. That is the range between a certain period that the market has moved. It's measuring the volatility of the market in a certain period, okay? And this is what we want. we don't want to get caught on the volatility. We want to be protected of stop loss, but we don't want to leave it without stop loss as well. On this way, we're going to be, 100% exposed. And we don't want to be 100% exposed. We want to be at least 1% to 2%, maximum, I would say, in my opinion, 3% of, depending the trade, of course, of risk, okay? So let me write this down a little bit and I will come back in a second again. All right, so welcome back, and this is the maths part. So for those who don't like maths, relax, it's not hard at all. I've just put these little, I would say it's very, very easy to understand. So ATR equal X times 6 equal Y. So very easy, you won't have any problems with it, all right? So as I was saying, I think it would be better for me to just write and try to explain a little bit more about the ATR for you guys so you can actually understand where I'm coming from. So ATR, once you upload the ATR on your chart, this is what's going to be looking like, okay? You're going to have right at the bottom of the chart, you're going to have something like that, all right? You're going to have ATR right on the left side, on the top, you're going to have ATR 000 and then a number. This number will be different from 100 because this is just, example, but this could be 200, 300, 30, 10, 1. It just depends which pair you're looking, because remember, the volatility will differ from it. And if you want to trade on the 4 hour, this may be higher. If you want to trade on the 1 hour, this may be lower. So it doesn't matter, your time frame, because if you want to trade on the 5 minute, this should be lower. All right, and then it goes from there. And if you want to trade on the 1 minute, that should be even lower. It doesn't matter what actually you will do with the time frame, because the ATR will get the volatility adjusted movements of the market, what is on the moment. Okay, what is on that 5 minute chart, what is on the 1 minute, 15 minute, 30, 1 hour, 4 hours, daily, weekly, monthly. Just depends on your trading style. If you want to trade on a swing trade, 4 hour, daily, if you want to trade on the daily, if you want to trade on day trade, 15 minutes, 30 minutes, 5 minutes, it's fine, it's up to you, okay? Now, how do we do the stop loss? How do we set it up as stop loss? So we got our entry point defined. We're going to be looking the first best entry point, okay? So let me just do a very, very quick chart here again. So coming down, and then the market starts to consolidate right here. Okay, Siri, thank you so much. Yeah, Siri wants to be on the video as well. Sorry, guys. So this is our consolidation point, and we are looking to entry right at the bottom of this consolidation. Okay, so that's our entry. Okay, right here on this E. This is our entry right here on the green line. Okay, and now, how do we set up a stop loss? So if we're longing, we want the stop loss to be somewhere around here, okay? So this is euro dollar, okay? Suppose that this is euro dollar. We're going to be looking at the ATR. We're looking at a 4 hour chart, okay? So this is a H4 4 hour chart. And this is the ATR number, 100. Right now we have ATR 000100. So that is 100 points, okay? But 100 points is too small, right? 100 points would be like somewhere, this is just a drawing, but somewhere around here. Now this is really too small. We can't get the market to be, we can't give the market only this little, thing to breathe. We need a more extensive stop loss, right? So how do we do this? Well, we take ATR value, so X goes for value, for ATR value, and then Y is stop loss, okay? So basically we take ATR value, on this case is 100, so we go ATR equals 100 times 6 equals 600, all right? So that's our stop loss, 600 points, all right? 600 points is our stop loss. So if this is 100, that's another 100, that's another 100, another 100, another one, another one. So 1, 2, 3, 4, 5, 6. So our stop loss will be somewhere around here. Okay, and now that looks a little bit better, right? This movement of the market, we're giving this space for the market to breathe. That's perfect. This is how you're going to be calculating your stop loss using the ATR. Now, how do you calculate your take profit? And this is the last and most important part. Calculating the take profit, as I say to you, there is plenty of different ways. If you have one way already, that's completely fine. The way I use is my trades can't be less than 1.8. All right, so my stop loss will be my take profit will be my stop loss times 1.8. Okay, so if my stop loss is 600 points, okay, easy to do it. Just get your calculator out. Do 600 times 1.8, 1080. All right, that's the minimum. Why? Because on the long run, what you need is, sometimes you're going to lose a trade today, sometimes you're going to lose a trade tomorrow, and then after tomorrow, and then after tomorrow, and then after tomorrow. You're going to be down 1%, 1%, 1%, 1%. Once you make it, you're pretty much making for 2 trades that you lost, the 1.8. The better the risk, the better your trading will be on the long run, okay? You can't forget that, guys. You're not here to trade and make $1 million tomorrow. You're here to trade on the long run, okay? I'm being very honest with you, very, very honest. Most of the other channels will say, look, we can make $1 million, we can make 100,000, we can flip 10,000 to this. Yes, you can. There is 100% probability of you do this, but it's much better if you can actually do it progressively and for a long run than actually doing just for today and tomorrow, okay? So 1080 will be my take profit. So TP equals 1080. Oops, sorry, 1080. Let me just, I put too much zeros here. All right, 1080. Okay, that's your take profit. Your stop loss 600, your take profit 1080. If you want to do, you know, a 2-1 trade, you can just do 600 times 2, 1.2, okay, and then you go from there. Now that you've learned my 3 best entry models, first best, second best, and third best, you will never forget how to actually enter the market on the best opportunities that are presenting itself. If you want to watch the full content of the trading strategy, the backtest we've done, everything, the backtest in the sense of on the board, okay, not on actual, on the actual chart. Feel free to access the playlist. We've compiled everything for you so you don't have to be running around. If you like this type of video, please guys, subscribe to the channel, give us a thumbs up. And don't forget that there's much more to come, okay? We're just starting this series. I think the next one will be much better. And we are most likely welcoming feedbacks from you guys. So please send us some feedbacks on the comments. If you would like to see something specific, leave it out on the comment as well. Now that you know how to entry, how to stop loss, and how to take profit, it's your time to actually, you know, get a demo account with us, call your account manager, and go and trade in the market. Test it out by yourself and tell me later how you think. See you guys. Bye-bye.